RIN TV coverage of the 2015 European Insurance Forum is brought to you by the Dublin International Insurance and Management Association. With all the talk of Solvency II here at the European Insurance Forum, we also heard discussion on the pros and cons of a global regulatory regime. Here, Darren Maher, a partner and head of corporate insurance at Matheson, provides insights into the movement towards global insurance regulation. Here are the highlights.
I think the talk of the global regulatory regime got started in the immediate aftermath of the most recent financial crisis. I think people realised then that the current regulatory regimes across the world were not fit for purpose. In the insurance industry in particular, people realised there was risk management issues and governance issues which needed to be addressed. So since then, people have been trying to repair those issues, both at a European and a local level here in Europe. And also people now realise that given that we have a large number of global insurance companies, that we also need to have a global regulatory regime. And therefore people have been trying to put a global regulatory regime in place which can ensure that those large global insurers are in a position where they're stable going forward. I'm not sure if it's fair to say that Solvency II is becoming a global regulatory standard. I certainly think Solvency II has been promoting equivalence in third countries, and there are real benefits for insurers based in third countries which are deemed equivalent under Solvency II, and for that reason a number of countries have been trying to ensure that they are equivalent, and a lot of work has been done in that regard. But I think in terms of a global regulatory regime, some of the key features of Solvency II will be important to a global regime, such as, for example, the risk-based capital standard and also, of course, the ORSA. However, I do think changes will need to be made, and there will need to be different features to a global regime to take account of the particular industries that we have in other countries. I think the benefits of global regulation are clear. There are convergence and consistency. Convergent in terms of the regulatory standards, which I think would be of great assistance to regulators in that they can speak to each other on the same level when they're talking about the same rules in relation to a particular global insurer. For the insurance groups, it will be consistency of approach, consistency of application. There will be less duplication of rules that they'll have to comply with. So I think those standards, those advantages are very clear. And should it come off, should we manage to properly introduce a global insurance standard, I think there will be many advantages if we can get there. But I think the resistance is coming from the industry. Here in Europe, the industry has gone through a Solvency II process. It took a long time. It costs a lot of money in terms of capital, in terms of new IT systems. Also, I think people are not clear as to exactly what a global regulatory regime would look like. Will there be a new global regulator? Will there be another set of rules that they have to comply with in addition to what is already there? So I think there's a lack possibly of understanding as to what a global regulatory regime will look like, and because of that people have various fears and concerns, and for that reason they're resistant to it. In terms of the next steps towards a global regulatory regime, there's a lot to be done. First of all, I think there needs to be a real open debate at an industry level and at a regulatory level as to what the minimum capital standard is going to be. I think secondly, we need to have willingness on part of regulators to get together, to talk to each other, to see where this is going to go and what shape it's going to take. They also need to get industry on board. If you look at Solvency II, the reason it's been a success and the reason Solvency II will come into effect on 1 January 2016 is that industry was properly engaged. And when industry is properly engaged, things can get done. Without industry being on board, it's going to be very difficult to bring about a global regulatory standard.
For more of our coverage of the 2015 European Insurance Forum, visit the DEMA website or the special 2015 EIF channel in the RIN TV On Demand library.